I can write trading strategies in a second. If I even explain to you how simple my trading is, you would probably laugh and think that how is this possible? But my trading is ridiculously simple. It's not hard. A 5-year-old could trade how I trade, if I'm honest. The strategy, the risk, and the psychology are 33, 33, 33. There's not one that lasts without another. If you think it's the system that's going to come in and make you money, you are wildly mistaken, which is why I said to you, I don't trade using technical analysis anymore. Technical analysis was kind of like my route in, but I've only got where I've got to because of the risk management and the psychology. Technical analysis, I feel like I know it like the back of my hand, that I don't even need to look at it anymore. I don't care if I'm right or wrong because of the psychology. So that's actually, the strategy is the last part I need. I started writing articles for all of these companies, so Zero Hedge, TradingView, FX Street. I look at just naked charts. I have nothing on my charts at all. You look at the charts so much that you know where the indicators were placing. If I look at a chart, I'll know what a MACD is doing without having the MACD on my chart. I'll know what an RSI is doing. I'll know what a fib is doing. I don't need them on the chart anymore because all of those indicators, all of those things lag the data on the chart anyway. The price action is the key. It's like the matrix. You just don't need it anymore.
If you could have known something before you got into trading, what would that be? Number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Welcome everyone back to the Words of Rizdom podcast. We are back once again and still the number one trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. Talking of which, today we have a 15-year trading veteran with us today. Trades the stock market now, I think has been through a progression in that journey. He's the founder of DND Capital, which I'm very excited to speak about as well. And he has written articles, if I'm not mistaken, of FX Street, Forex Factory, I want to say.
They've taken them.
TradingView. They've all taken them, but it's the one and only Rajan Dhall.
Brilliant. Thanks, Riz. Thanks for having me, man.
It's my pleasure, man. People won't know, me and you, actually, we worked together very briefly in the past. Lost touch. LinkedIn brought us back together. Yeah. But since then, you've done incredible things. You've gone on to do, as I said, DND Capital, which we'll get into. And thankfully, I've been able to build this thanks to the trading community. And here we are. But where to kick things off, I think that you've had an incredible journey. You see, I don't know if you started with Forex. But one thing I learned from my research is you started actually in sports.
Yes.
Yeah? Started in football.
Yeah. So, I used to trade. I used to play at a football academy when I was young. I grew up playing in football academies. So Brentford moved up. I tried, Brentford were in League 2 at the time. Like now, obviously, it's all changed the names. But they were in League 2 at the time. Not the best team in the world. But obviously, as time went on, I tried to make it to the Premier League. Maybe it was a bit of a mistake of mine when I was younger. Ended up not getting signed. So as I was going through my education, I did sports science at college and at university, and then ended up working in the gym. Which
led to trading somehow.
Exactly.
Which people will probably be thinking, how does that make sense?
Yeah, it was interesting because although I always had an interest in shares and in trading anyway, I didn't know anything about it up until that point. But when I first took a job, I started working in the JP Morgan gym in the downstairs at Blackfriars. And, some of the listeners might even know me from there because some of them were traders. And, I just started making good money, coaching, fitness coaching, training people for marathons, triathlons, and all kinds of events. And when I started making money, I started to ask them, well, where should I put it now? And so random, some of my first investments from working in the gym were in companies like Tesco's, things like that. Whereas I would ask them for tips effectively saying, look, I've saved a bit of cash. What do you think I should put my money in? So British American Tobacco, Tesco's, and lo and behold, I started making good money holding those shares for a while. And it just piqued my interest, and I got more and more interested and started asking them more and more questions. So I had a good foundation from asking real good traders in all different areas of trading, just questions and stuff. But I didn't know what I was doing at all.
So interesting because it's a very rare, very, very unique and rare story.
It's lucky.
Lucky, yeah. Well, it's interesting you say that because a lot of traders, especially the verified and veteran traders, they talk about luck. And it's such an interesting thing because like you make your own luck, but then there's also like this element of maybe fate or whatever it's meant to be. But there's something that happens where, you know, everything aligns, whatever you call it. It is an element of a lot of people's journeys, I think, without even realizing.
Yeah, 100%. I mean, I'm a firm believer of like taking advantage of opportunities when they get in front of you. So yeah, obviously it was luck, but I ran with it when they gave me the opportunity. When they were open for asking questions and helping me or whatever. I think it was just like I was open to learning. I took their advice on board, and obviously it was pretty soon after I started making mistakes with trading. So it was take their advice on board, and I thought it was easy, like just to buy and hold and make money. And I didn't get through a bad period for a while. It took me a long time from that first trade that I placed to actually get into a negative situation from trading.
Really? Was that a good thing or a bad thing?
I think looking at others' journeys now, obviously I coach some traders and I look after some traders. So looking at other people's journeys now, I feel like it's better to go through the bad times first than it is to be successful at the beginning, because you lure yourself into a false sense of security if you're good at the start, which I was. And that just made me overconfident and have a little bit of an ego at the time. So I've obviously had to try and learn from that.
What do you think made you good at the beginning then?
My hands-off approach. So what initially I was doing was buying shares, or when I started trading currencies, I used to wake up really early in the morning, and my first session in the gym was 6:30 a.m. I used to do the open almost every day. I used to place my trades, go off and work for the whole day without even thinking about them, and come back and check them when I finished work. And that made me a good trader. But at the time, I was so ignorant, I didn't even know that was what was making me a good trader. Just my hands-off approach. That was the best thing I ever did at the time. And in hindsight, I did go back to it, but it took me a long while to learn that lesson.
Interesting.
Yeah.
It's such an interesting one, because I've recognized that in my own journey as well, and I've seen it in a lot of other traders. Is like they start off doing something right, they go off and change something, and in the end, though, they have to end up going back to where they were.
Yeah, I don't blame anyone really for it, because if you're doing something well and you think, oh, if I dedicate more time for this and if I put more education into this, I'm going to get better, because the rest of life teaches you that. If you're a doctor or you're working as an engineer, the harder you work, the better you get at something. But I don't think that's the case in trading, in my own experience, and also coaching traders. I don't think it's the main thing. I think the main thing where you can do your learning is for your mind, not in the skill itself. So that was a big realization.
Definitely. Talk to us though about that transition then. So you went from obviously being the PT, getting these, this advice essentially, and sort of talking with these traders. Yeah. Luckily, professional traders who you could literally verify because you're in the building with them.
Yeah.
Where was the transition from there of you becoming, more active in trading and really making a career out of it? Yeah. Was that a thought at the time to make a career out of it?
You're going to laugh, and I don't know if I've ever told this story, but when we were at the gym, we used to get the City AM, the newspaper. And when we were bored and I was trading and making money, I used to flick through it to read the news stories about the city. But then I started looking at the job adverts. That sold me because I worked it backwards. I saw the salaries that they were earning, and I thought, I want to be on that side of the table. How do I get there? And then I looked at the jobs that it took for people to get there, and I genuinely started at the bottom. So so when the gym closed down 4 years after I started working there. 2 of the staff that were working there opened up a firm in Windsor. I started as a clerk and as a broker on the phone. Clerk was just writing the transactions for FX transactions, making sure the reconciliation was done for physical FX transactions. It was a long time ago, so it doesn't happen anymore. And then I used to genuinely make 200-300 calls a day, sales calls, selling forwards and options in currencies. So I used to sell to corporate companies, and we used to have a trading desk that used to process the transactions for selling physical foreign exchange. Options contracts were what I used to sell the most. And then that rolled on to being electric. So then it stopped being phone selling. It started being on the computer, like people sending in orders. And I grew up in that industry. But where I moved into analysis is that my boss, who was working at the company in Windsor, I moved to a different company in Windsor. He was a member of the Society of Technical Analysts, so like with Axel, Clive, and all of these guys. And I asked him, like, you're writing these reports and sending them out to the customers. I want to get involved because I want to know that side of the business. I want to know why the currency markets move. I want to know what you're writing about the financial markets. And I got sent on the course. And that was genuinely probably where my trading career really began. It didn't start until up at that point. I was a broker. Mm-hmm. And a broker is a completely different job.
Yeah.
As soon as I started getting to analysis, then my trading career really, really began.
What was your thoughts on the analysis side? Was it something that you were excited about? Was it something you enjoyed when you started to learn about it?
Yeah, because again, purely ego, I would say that people thinking that you know what you're on about is quite a nice thing. And this is me being completely honest. If people look to you as the area of where they're going to learn something or the area of expertise, and people ask you questions on treasury desks and things like that, it makes you feel good, but it doesn't prepare you for trading. So I learned a lot about the fundamentals, as you know, of the financial markets, interest rates, CPI readings, GDP readings, all of this kind of stuff, combined it with the technical analysis. And it made me learn more about the markets, and I learned about how the market mechanics work. But it didn't help with the trading, but I thought it would at the time. Mm. Yeah.
And then in terms of taking that course, STA, right, the Society of Technical Analysts. I struggled with that.
You got it.
With my podcast with Axel, which is great though. Today, literally, it was like kind of me individually meeting different people from a similar network.
Yes.
Which was fascinating. But like, what was that like in terms of taking that course? Was it? In terms of foundation, in terms of being that, was that your first point of call in terms of technical analysis?
For technical analysis, apart from reading other people's reports, yes, it was. I was relentless when I was young, so I had all of the books already. John J. Murphy, I had like Dalton and Stiedelmeier. I had all of the big technical analysis books before I even got to the course, and I had been studying them for a while and working in the industry, so I knew a lot about technical analysis before I took the course. The big thing about the course is when I got there and I did the seminars with all the other people and I got to network, building up the network of people that I could talk to about trading and people that we could get on the same wavelength. There were big pros and cons to this, which I will tell you about, but that was a game changer for me. Meeting people like Axel, me and Axel were quite close for a while because he was head of education. And I was one of the lecturers at the LSE, and I was also like the helper that effectively used to give the flyers out to the students. I used to sit there, and just in case maybe one of the lecturers couldn't turn up because it was snowing, I used to fill in for them. I used to do things like that. And to be at the London School of Economics and meet those lecturers and lecture myself there was an invaluable experience for me. That was one of the best experiences of my career, I'd say.
Why?
I think let's say, for example, Jeremy Duplessis, Stephen Goldstein, Axel, these guys, and there's so many I can mention, but those guys, I would obviously put in some other people in there. I watched their lectures probably 15 times each because I was effectively the teaching assistant. Mm-hmm. So I had to repetitively watch these things over and over and over again. And it might surprise you, I never got bored. I listened to every single lecture like so many times, and every time I'd pick up something new, and like even I'd ask questions in the lecture sometimes if they changed something or if a new speaker had come in. Even like I'm obsessed with this industry. I wanted to be the best, and that effectively was a big part of enjoying that part of my career.
Do you think that's necessary in terms of a learning process, to be obsessed, to be meticulous in the process of learning? Profitable trading really boils down to two things: opportunity and volatility. And that is why the podcast has partnered with Market Journal. Because between the years 2016 and 2020, the amount of opportunity that was available, as well as volatility to take advantage of, was at the highest it's ever been. And all of that really pointed towards one man, President Donald Trump. During his period in office, all it took was one tweet, and that would present so much volatility, and the right traders would take advantage of that and would create their record P&Ls. And that is why those same traders are so excited for this new period between 2025 to 2029, when we have President Donald Trump back in office. Now, Market Journal is going to give you the weekly insights you need across crypto, Forex, futures, and the stock market. So regardless of what happens, whether it's a tweet, a particular stock running up hundreds of percents, whatever volatility and opportunity that Market Journal can identify, it is going to share with you every single week. So you can purely focus on taking advantage of those opportunities and taking advantage of that volatility to create your record P&L. Now, Market Journal is absolutely free. All you do is click the link in the description below, put in your email, and you will receive key updates on the markets every single week. So you are always up to date with what's going on and ready to execute when the time is right. Links in the description below. Thank you for enjoying this episode.
Yeah, I do. I think it is, but you also have to reduce it when you've learnt enough. So I would call myself at the time a technical analyst, a generalist. So I knew about point and figure, market profile, all the indicators and everything like that. But then there was a time then in the future, obviously I didn't know at the time, that I realized I didn't need it anymore. So I learned it all, I understood it all, and basically I'm still a technical analyst at heart, but I don't really use it that much, if I'm completely honest. So it was learning everything, learning the foundations, picking and choosing what I wanted out of it, and then completely forgetting about it as well at the same time. So it was a very strange thing I did, but I wouldn't have been able to get to that without doing it.
Yeah, I think that's the important factor. Is a lot of people reminisce on the past and they sit there and regret time wasted, when in reality that time wasn't wasted because it led you to now. It's like me, I reflect on my journey of, let's say, working for 10 plus years to get to this point where people may deem I'm successful, right? But in that 10 plus years, there's at least 7 of them where I failed.
Yeah, of course.
Not only at trading, but like loads of other businesses.
Of course.
And easily we could look back and go, that was a waste of money, a waste of time, blah, blah, blah. But I wouldn't be here if I didn't do that.
100%. I'll give you an example. So Thomas Anthony, who is like the specialist of Elliott Wave, right, at the STA. I loved Elliott Wave, and I do like the principles of Elliott Wave. But if you're trading stocks and you're trading like the S&P 500 the way it is now, you're not looking for a wave count in this thing. If you're looking at a weekly chart or even a daily chart, sometimes this thing is going to keep, it keeps moving in that direction. So like maybe on commodities or other markets, finding out where it's going to fit for you and where it's going to work is a good thing. But they're the kind of things I had to unlearn. I looked at Elliott Wave for a while and thought this is for me. I really like it, when it wasn't. Even moving averages. I disregarded moving averages very early on because they're so lagging. And like moving average crosses, death crosses, things like that, golden crosses and things like that. I then, because that didn't work for me, disregarded that, and I've only recently come back to it in the last 4 years.
Really?
Because it serves me a different purpose now than it did when I first learnt it. So
what was that difference?
So as an insight, before I would try and trade around moving averages, trade the crosses and things like that. Whereas now I don't use it for that at all. I just use it for my bias. So like, for example, on the way that I trade stocks on a daily, if something's trading above a 21-day moving average, my bias will be long for that, most likely, unless we're getting some very negative days and we're super extended away from it. If we're trading into it and then back out, I like that pattern quite a lot for my day trading. So I never looked at moving averages like that when I first learnt them. I looked at them as trading tools, not tools for my bias. Whereas now I just use them as tools for my bias, and they're really helpful for me. Whereas before they weren't.
I love that distinction though, that sort of switch in how you perceive it. It's the same thing. Nothing changed about it.
No,
it's just how you treat it, how you observe it, and then how you use it.
It was there the whole time. I was just using it wrong, wasn't I? So
I love that. I think most people probably do, right?
Yeah.
Which is interesting because when I sat down with Axel, in terms of technical analysis, from a retail perspective, when you hear technical analysis, you just think chart patterns, right? Most of the time, and the indicators, of course. But equally, when you think of those things, though, from a retail perspective, it's just like, head and shoulders, wedge, channel, and that's it. But when speaking to Axel, it was more deeper than that, where, you have a head and shoulders, or yes, you have a channel, wherever it may be. But it's the nuances, it's the rules, it's the data behind it that is actually what's being taught, but also if you're going to use it, that's how you use it correctly. Yeah. Versus a retail trader, I think they see a cheat sheet, those classic cheat sheets you get on Google and people print off, and that's it. And all they do is go, I see a head and shoulders on this chart, sell or invert or whatever.
Correct.
Versus understanding that, okay, you can call these, and what people try to refer them as, which is even funnier, is retail concepts, which, cool, okay, that's fine. But then you're still not using them correctly.
No.
You're not treating them correctly. You're not actually respecting the art of trading, which is going deeper than just a surface level of like, oh, let me look at this picture.
Yeah.
And then look for that picture in the markets.
Correct. And this is the problem, I think. For me, that's what determines a retail trader versus a professional trader. But you're not going to get to know that without the experience. I mean, things like this podcast and they're invaluable tools, because we're just like anyone else in the sense that I went through all of that. I tried all of that. So I was very pedantic when I was learning at the STA. When they showed me the indicators, and they'll probably remember this, I went back and tested each indicator 100 times on each time frame and went back with the results. So when they went and said, well, RSI was an overbought, oversold indicator, it wasn't for me, but I had to prove that to myself. I did the work to prove that to myself, that I can't use it like that. Every time it went into overbought territory, actually, if you kept buying it, you would make more money than it coming back. So anybody that sells
Axes are the same.
You see what I mean? But you're only going to get that from time later on. You have to pay your dues in the market to understand these things. And then, lastly, what I would say is now I look at just naked charts. I have nothing on my charts at all. If I do have it, it's probably for the other people that are in my group. And you look at the charts so much that you know where the indicators were placing. So like, if I look at a chart, I'll know what a MACD is doing without having the MACD on my chart. I'll know what an RSI is doing. I'll know what a FIB's doing. I don't need them on the chart anymore, because all of those indicators, all of those things lag the data on the chart anyway. The price action is the key. So if you stare at your charts enough, you suddenly, it's like the Matrix. You just don't need it anymore. And I don't need any of that anymore. And it's just comes from experience.
It's like building that muscle. Correct. But it takes that time. Like the person. An interesting way to look at it is like, if you are someone who trained for 10 years, right, to get to a level where you're in a 1%, or even let's say even be more generous, 10% bracket of the top lifting or the top performance in your run, or whatever it may be. Yeah. But that 10 years was necessary for you to get into that level. Correct. And then when you're in that level, to maintain it because of the 10 years, it's less than when you first started to find yourself in that level, right? Yeah. It's the same principle with the markets. It's like you paid your dues to a level where you're now in that 10% of performance, 10% of having to be able to trust your intuition, to have the confidence, to see the whatever that's patterns or indicated, but be able to recognize it without having to even play on. Yeah. But a lot of people, I think, search for a strategy that does that for them, thinking if I learn that strategy and if I find the right course or mentor who has that strategy, that I can then learn within a month or a week, and I'll suddenly be that way, versus 5 years. Let me give myself 5 years, maybe even longer. Yeah,
I love that. But I really, really like that, because I have had people come to trade with me that come in to trade to learn the things and leave, because they think that that's what the most important thing is. No, I can guarantee anyone that the strategy, the risk, and the psychology are 33, 33, 33. There's not one that lasts without another. If you think it's the system that's going to come in and make you money, you are wildly mistaken. If you think it's the psychology, it could probably be done alone, but it can't be done without the risk management. None of them can be done without each other. So they're all 33, 33, 33, which is why I said to you, I don't trade using technical analysis anymore, because I don't need to, because of the other two. I think technical analysis was kind of like my route in, but I've only got to where I've got to because of the risk management and the psychology. The technical analysis, I feel like I know it like the back of my hand, that I don't even need to look at it anymore. I can look at a chart and think, I can have a view, and I don't care if I'm right or wrong because of the psychology. And then I don't care if I'm right or wrong because of the risk, as long as that's managed right. So that's actually, the strategy is the last part I need. Yeah. The other two are more important than the strategy for me. But you can't live without developing a strategy in the first place. But like, if you didn't build that foundation first, correct, that wouldn't be the case. But because you did put so much work into it, it's actually the case where you can then focus on the others. But talking of psychology, what was that journey like for you? Like, from, as you said, you had a good start. Yeah. Then you had a bad period. Yeah. What did that do to your psychology then? So I'll explain. So I this is crazy, right? Because even to this day standard, it's a good thing that I did. So I started with a $200 eToro account. I turned it to $4,000. Oh wow! In like a very short space of time. probably about 2-3 months, okay? Now, for anyone in terms of a percentage return, that's incredible. But I didn't know anything. I was ignorant. So I looked around and thought, well, traders are millionaires. Like, what? This isn't good. You know what I mean? Like, I turned around and thought, well, if I can do this, trading as slowly as I was, opening the positions in the morning, looking at them after work, what would happen if I took some time off work? So I did that. I took 2 weeks off from work at the gym, stayed at home, tried to trade, day trade, with the same strategy, lost half the money in 2 weeks. Took it down to 2,000. Obviously, by that time, I was demoralized and I just left the money in there. I was lucky enough that I didn't lose all of it. I left the money in there. And that was where I started buying the books and doing the STA stuff and you know, getting a bit more down my journey. And then I used that money as kind of like investment in myself. And you know, I was still working. So as like any retail trader, I had a full-time job and I was learning on the side. And that euphoric period of doing well, one, it made me realize that, yes, this is possible. I can earn money from the financial markets. The second thing was I didn't learn the lesson very well because it took me, and I have no problem saying this to anyone, 4 years for me to start becoming just past break even. So it was a 4-year journey because I didn't have a network. I didn't have a DND Capital. I didn't have like a society that I could go and talk to people about trading where everybody was open. So I was just learning from books, YouTube videos, Mark Douglas, you know, both Steves, so Ward and Goldstein, and the psychology stuff really, really started to kick in at that point because I really thought, well, I'm so good at technical analysis, I should be making money. But it didn't work that way for 4 years.
Interesting you mentioned that because I literally just had the podcast with Steve. Yeah. And one thing that we really highlighted, which I think is a bit more of a unique approach that I imagine obviously because you've studied his work, it wouldn't be so much of a unique thing to you, but I think in terms of the retail space, definitely very unique in terms of understanding your personality traits as a human being to then match your asset class and your trading strategy to your personality. And that was a big topic we were talking about, how like if you are really aggressive a bit, if you're on edge a bit more, you're fast paced, you're fast thinker, obviously scalping. And then obviously alongside that probably a volatile pair. Versus if you're trying to have that, if you have that personality but then you're going to like a pair that hardly moves, it's maybe a longer term perspective, but equally you're trying to swing trade. You're probably going to be struggle to manage that and then wonder why you have a negative experience. Did you, going through that process of that bad psychology and learning about psychology, is that a process you did to get a bit more insight into your personality to match to trading? So now I don't have a trader at DND Capital that hasn't gone through a personality profile and a risk profile. So from Steve. So there's not a trader that I trade with that doesn't know their personality profile and their risk profile. I myself was quite lucky, I would probably say in and about 2012, 2013, where one of the funds that I was trading at had the foresight to employ a trading psychologist. And I'd never seen a psychologist up until that point. And since then, I've seen a psychologist and a psychiatrist. So I from that learning experience, I took it as far as I felt like I could, and I'm still going through that journey. It's a never-ending journey of self-discovery. So yes, I fully agree. But me and Stephen, we say that the best traders that we both know and best traders that I know themselves very well, and they have a lot of self-acceptance. But for some human beings, that's harder than others. Some people are like, yeah, look, I really don't care. I don't care what people think about me, blah, blah, blah. Some people are like really cagey. They're not open even to themselves. So that journey for me probably took a bit longer than it would for some other people. It took me a bit of time. So I went through that journey. Yeah, 100%. What were some of the key lessons you learned that helped you to elevate?
There's the self-acceptance, 100%. I had to accept things about myself because I was very stoic going through a football career. Everything was ego. Whoever shouted the loudest, whoever was the toughest on the pitch, that was a strong part of my character and personality. When actually I had to embrace my softer side. I really did. It helped when my daughter was born, but when I embraced my softer side, it helped my trading to no end. Because that's where some of my creativity comes from. As I've always been a strategy designer, I can write trading strategies in a second. But unless I opened up to that, I wouldn't have been able to create some of the strategies. But it was secondary. I had to accept that part of my personality first before that was going to come.
Of course. Yeah. And
I was always seen like being in a leadership role. I've always been in a leadership role. I was always felt like, no, you have to be tough all the time. You have to be like, an alpha man, like a bit of a macho person to do this job because it's a testosterone-filled environment. It's not the case. It really isn't the case.
Because if anything, that macho man, that alpha mindset, essentially, is almost negative or counter what is necessary because it brings so much ego with it.
Can't take a loss.
Yeah.
Yeah, because you don't want to look weak. So that going through that psychological journey taught me how to accept losses and taught me how to bounce back from those losses much easier than I ever did before. But I didn't. Again, it was things I didn't know. It was subconscious.
Exactly, subconscious. 'Cause I was going to ask you just then, actually, in terms of how did you handle adversity? So that when you didn't get signed in football, for example, how did you handle that at that time?
I was so closed off as a human being. I didn't care. Because football is about opinions. So one coach could want exactly what you want, and another coach could think you're great, and another coach could think you're rubbish. So it's a lot of that life is about opinions. But because I was relentless, I would try and go everywhere. So I ended up playing semi-pro football for Kentish Town. So while I was at university studying, in my mind, as long as I was always playing football, I had a chance. So even when I was playing semi-pro football, I was still getting called for trials in different places. So I still went for those trials, not getting signed. And then I just started working in the gym, and it kind of fell into place. And I enjoyed working in the gym. I enjoyed the environment. So the knockback, I should have been more sad about it.
Interesting.
But I wasn't. I was so relentless to get out of the situation I was in growing up in general. I had a one-track mind to be the most successful human being I could. Nothing was going to stop me, like as a freight train, to getting to my goals.
And then that mindset coming into trading, though beneficial, did it have its little issues in terms of when you hit failure? Or was it actually beneficial because then when you were taking losses, etc., you still persevered anyway? Yeah,
so that's how it worked at the beginning. So I didn't mind. I kind of brushed the losses off, quite easily. But it was later on in life when I started to work on my psychology that I could learn from the losses. At the beginning, I wasn't learning from the losses very well because I was winning for a long time. But then it did hit my ego because I was sitting there thinking, like, I'm spending money on this, I'm not making the money back. Like every retail trader, anybody that joins a course or a trading community, you're investing in yourself. And if you're paying for something and you don't feel like you're getting better, that's a demoralizing situation because of your ego. You might have to justify that to your family, to your wife, to whoever it is. But if you persevere with it, you'll get there, but nobody's going to tell you that at that time. I've had people who have trained with me in other institutions that I've been in that have honestly spent like sometimes hundreds of thousands of pounds on fake courses, rubbish things, whatever, before they've made it. So, and I just say to them, look, you've done that now. There's nothing we can do about that. I'm sorry you've been through that situation. Baggage, but you can't carry that in with you to this journey because that you'll ruin your shot. So we have to do a lot of unlearning as we get into the next part.
No, definitely. I loved one thing you said there. I've never heard of it before, but I love it. It's strategy designer.
Yeah.
I love that. Is that an actual term, or is that something you've coined?
No, I've worked with some algorithmic trading companies who have gone from trading proprietary trading systems which are discretionary to having to write them on a program to then put them through Python or C++ or whatever. I've worked with some companies to do that. And when I've gone in, like, honestly, if anyone gives me any indicator, any time frame, anything, I can develop a strategy for it. So strategy design is huge. It's a whole industry in itself, but it doesn't mean that the trader's going to get it. Like if it's algorithmically done, it's obviously a bit different. A machine's running it, But the other thing about algorithms, a lot of people might not realize, is you switch certain ones off and on at different times throughout the year, or different seasonalities or different time frames. So even then it's not that simple, but you have to design them. So somebody has to do it. And I am able to do that.
I love that.
Yeah.
So I didn't even know that existed. Yeah, I understood coding. Yeah, people code.
Yeah.
And if you had a strategy, that made sense. But actually being a designer of them to then have coded, even if they're not coded, can you design them and then it's got edge and you pass it on to someone? Though, like I said, that person might not be able to perform with it because that's on them as an individual. Yeah. Is that a possibility?
Yeah, very controversially. At the moment.
Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZella. TradeZella is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a Forex trader, whatever trader you are, all you do is connect your trading platform directly with TradeZella. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZella does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, backtesting, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZella, so use WOR for 20% off your yearly subscription, or Riz10 for 10% off your monthly subscription. The link is in the description below. Let's take a break for a minute there, guys, because I want to let you know about one of our sponsors. Alpha Futures is offering the best one-step evaluations in the industry. They have the largest end-of-day based drawdowns in the entire industry, with up to 90% profit split and lightning fast payout speeds, and offering advanced and standard accounts to fit your needs. Alpha Futures is truly offering the most elite plans for the lowest total cost to entry in the industry. You can start as low as $79. And thanks to the podcast, using code RIZ, R-I-Z, you can get 20% off any of those challenges. Go to the link in the description below, and let's get back to the episode.
I'm anti, machine learning and AI at the moment, just right now, because the whole part of community or part of traders are like, a trader can outperform a machine at the moment because there's intuition, gut, there's things that a human can do that a machine can't. And I have both. So even with an algorithm, how easy is it in your experience for people to fit data when they're backtesting?
Yeah, all the time. Yeah.
This stuff doesn't work. Like randomized data, it works. So retail traders a lot of them don't realize that and don't know that. So you can take Eurodollar or you can take Apple or whatever you want to take, S&P 500, look through all of the data and think, oh, this strategy is working when you're backtesting because you've looked at the chart, worked out what indicators work out best around the chart, and then suddenly find out it doesn't work in real life because everything is 50-50 in real life. And that's where a mathematician comes in. So part of my background is I've done a lot of probability and statistical work, and when I was developing some algorithms with some companies, unfortunately they didn't understand that. They thought, well, if you optimize the data, it's going to make the system better. But unfortunately, it doesn't work like that. So that's why I like humans trading, because humans can see the real world and react to being present, where a robot can't.
That's fascinating. Absolutely fascinating. One thing I got to ask you is kind of a little bit off topic.
Yeah.
We'll get straight back on topic after. But from what I can tell, one very energetic, very clear-minded, someone who's got a hell of a lot of knowledge in your mind, more so than I would say the average person could probably hold and retain. Is there anything in terms of I don't know, that you need to do in terms of routine, a lifestyle that allows you to operate in that way?
Yeah, so my exercise regimen every single day, my routine is very, very important to me. I meditate probably about 15 minutes before my session with the traders before the open. So I do things like that. My eating routine is pretty much the same every day apart from dinner. So I have a routine every single day, but what I'd say about that is I realized the more I dumbed down my trading and my brain, the better my trading was. So I went through a classic period of overeducation. I overly educated myself looking for the Holy Grail, when now if I even explain to you how simple my trading is, you would probably laugh and think that how is this possible? But my trading is ridiculously simple, and it's not hard. anyone, a 5-year-old could trade how I trade, if I'm honest. So they would just have to learn it and stick to the rules.
I love that.
Right.
We'll get into your strategy very, very shortly. But in terms of, as you said, over-education, but I think that's allowed you to, potentially, you can correct me if I'm wrong, but because of that, though there's a negative maybe on your trading side for a period of time, but in reality, it's allowed you to do all these different things, such as the strategy designing. But what I knew you for, and I didn't realize, prolific trader as well, and doing all these different things that you're doing now. What I knew you for was for articles, writing articles for these well-renowned blogs, websites, and companies essentially, and finance. Even maybe behind the scenes that I didn't know about, so they're very much public-facing ones. We're probably writing reports for actual, trade, hedge fund traders and so on to take action on. How did you find yourself in that role?
Yeah, so when I traded for the fund, I left. Basically, our fund was dissolved because the company had made enough money and they shut it down.
Okay.
So we were backed by some guys who were from Qatar and Kuwait. When they made enough money from the fund, they closed it, and I found myself out of a job. I was made redundant, and they gave me a good package, so I was quite happy. But I was jobless, and every trading role I applied for, they wanted a PhD in physics, PhD in maths, and that wasn't me. So I wasn't getting another job in trading. So I thought, well, what can I do now? I went over to news and analysis. So have you ever seen a squawk, an audio squawk?
Yeah.
That's what was my job. So I went to basically a couple of squawk companies. I won't mention any names. They're rivals, so I won't mention any names. And we had all of the news systems, all of the journalists, all of the TV screens up, and we're looking at 20, 30 screens at a time. There's 4 of us in a desk. As soon as breaking news comes out, Saudi Arabia have cut oil production by 700,000 barrels or whatever, and the market goes crazy. So that was my job. So that was a really good insight into the trading world, and it helped me a lot, because sometimes the best news would come out for a company and the stock wouldn't move, and I'd be like, what's going on? This is odd to me. There was one particular airline company who used to make airports, right? And we won a contract with Heathrow and Gatwick, Spanish company. And their share price wasn't moving. The thing is that sentiment was so poor on the day, investment sentiment was so poor on the day, regardless of how good this news was, it wasn't moving the stock higher. But when sentiment picked up again, the stock shot. So it made me learn things about market breadth and when things happen in the market. And this was all just observation, because I was reporting the news. There was another example where JP Morgan upgrade a stock to being overweight from neutral. And the stock price would just shoot off, and it would go mad because we'd reported it, Bloomberg had reported it, whoever. And that helped me start to learn what actually moves the market, what moves sentiment, why does sentiment exist. And then I started writing articles for all of these companies. So Zero Hedge, TradingView, FX Street,
Zero Hedge as well.
Kitco.
Wow.
Yeah, so you wouldn't know that it was me that wrote some of the articles at Zero Hedge. But yeah, I used to do some of the European stuff. I didn't work with him for very long, but it was for a while. And yeah, I developed selling my articles to a few companies around the world.
People would steal them as well.
That was the thing. So there was a couple of companies that would kind of plagiarize my articles and send them to their traders and stuff. But that it is what it is. You just come to the territory, I suppose.
100%.
Yeah.
But it's incredible though, because I know the value in those was. I used to remember seeing feedback on them. I even would, take a look at them. And again, I was someone with very limited, even to this day, very limited fundamental knowledge, but you could really take a lot from it. But just to touch on, before we move on, I think it would be a very powerful lesson for the audience in terms of sentiment. Why is that important? What is it that you're looking for, and why or how can traders use that in their everyday trading? Yeah,
so I look at a few tools. So gold is one, the fixed income bond markets is another, stocks is another, and there could be something that's in fashion or something like that. The combination of all of these is kind of where the billionaires, trillionaires, hedge fund managers, whatever, the flow of money goes in certain places. At the moment, crypto is king right now, right? Because of Trump. But the flow of money has gone there because people have accepted it, because somebody had reported it. Somebody had to do that. People knew that was going to be in his demands of what he wanted to do, through his manifesto, getting into power. So these are all of the things that we have to think about, but that money has to come from somewhere. So what's not in fashion? Why is that getting there? So let's say green tech, for example, right? Electric vehicles and all this stuff, that was a booming market recently. But, you look at Chevron, Exxon, those kind of companies, they were on the decline, but Trump isn't an environmentalist. So then that money's going to come out of green tech. Green tech would have done a lot better had it been Harris that won, So those shifts in where the paradigms of money are going, they help us make our trading decisions longer term. So like MSTR, MicroStrategy, who are on the back of Bitcoin, we know about that. We know how they're leveraged. We know how that company works. The money's going to be moving around that like it is with Tesla. So those companies have increased in volume, but that volume's got to come from somewhere else. And other companies now are just not in fashion. So we look at the trends of the market and the shift of the flow of money quite a lot.
So is that what you would define it as? Because it's something that Luis Borsellino said as well. Like. The key to being a trader is following the money flow, is what he said. And bear in mind, he was from the pits as well. But
Yeah.
he goes, it's the same principle now.
Yeah.
It's following the money flow. Like when it's hot in healthcare,
Yeah.
when it moves to railway, when
Yeah.
it moves to so-and-so,
Yeah.
and trying to be ahead of that.
Yeah, who's the contrarian trader? The one that
Jason Shapiro.
Yeah. See, now, I've never spoken to him, and I really would love a conversation with him because I'm the opposite of this guy.
Really?
100%. But he makes money and I make money, so I would love to have that conversation because I'm not going into any trader and saying to them, trade against the trend or look for the tops or that's not me. Because like really, for example, Tesla, I've traded maybe 15 times in the last 30 days, 40 days, and it's made me money. But the trend is going up. I'm not reversing that trend. I'm not the one that's betting on that trend, reversing every time. And yes, I understand his perspective, and there's more than one way to skin a cat, right? So I respect the way he does things. But I'm the opposite guy to him. If money is flowing into those areas, I put it down as a river, yeah? So a river's flowing, I'm trying to get in and out of that river, it's flowing in that direction. I'm not trying to swim against that tide and get tired.
Yeah.
That's not me. So yeah, like I would just love to have a conversation.
We'll make that happen.
It's so interesting.
We'll make it happen for sure. He's a great guy, and I think you'd have a great conversation.
Yeah.
To just offer you some from our conversation that I had with him.
Yeah.
The way he does it that way in terms of he's like the opposite of what the masses are doing.
Yeah.
But it's similar to what we just talked about, the money flow.
Yeah.
I think this might make sense to you in terms of what he does, but he goes like, he looks at the sentiment.
Yeah.
If it's really, everyone's buying, everyone's long.
Mm-hmm.
But then economic data comes out and it doesn't move.
Yeah.
It doesn't shift. It
Yeah.
actually does sometimes the opposite.
Perfect.
That's where he will then look to say, okay,
Yeah.
something's wrong here. And even if it's not long term,
Yeah.
it's just a short term, fit his rule set, fit his criteria, in, out, whatever that looks like.
Yeah.
And then it might continue again. That's fine.
That's perfect because I look at the stocks that are doing well, but when the market's going down, they don't fall as much as everything else. So I look at that in the opposite way.
Yeah.
So it's exactly the same thing, isn't it?
Yeah.
Really. So when we're having a bear market, let's say Nvidia's holding up or Microsoft's holding up and they're holding up well in a bear market, but everything else is selling. When we get back into the bull market, that's the one I like the most normally.
I love that.
So yeah, it's the same thing, but the opposite,
Definitely.
isn't it?
But definitely, we're going to try and put you guys in touch for sure. But in terms of your trading, so you're doing obviously these reports, right? But you're trading. One thing people might not realize at home though is that you're a profitable trader. You're a very consistently profitable trader for a long period of time.
Yeah.
Have a track record. And one thing that we discussed when we talked about it was like, the returns might not be what you see on social media, hundreds of thousands a month, etc.
Yeah.
But you're making multiple six figures a year.
Yeah.
Right.
Yeah, it's an interesting one. So I'm not one to turn around and say like I'm a multi-millionaire trader, blah blah blah. I'm not that guy. But what I can say is that I'm consistent. So in our live trading room, our trades are all open to everyone. So every day I get up, they can see my trades, they can see my stop losses, they can see my targets, and we trade live in front of everyone. They also know the performance of the fund. So every quarter roughly, I have the statement. And I put the statement up and I have binary win-loss information, risk to reward information, slippage information and all this kind of stuff up for everyone to see. One, so they can see like how humanized the situation is. Second, because it's something that everyone can reach. It's not something that's out of this realm for any human. And then like it grounds me because unless I'm that transparent and open with our community, I then have to stick to my rules. So if I'm there and I've said to everyone, 2-to-1 risk to rewards, make sure you're in around the 50% win rate. If I'm not doing that myself, I have no right saying that to anyone else. Mm-hmm. So everything's open and I just take one trade every single day. So if everything's open, they then can see that I'm practicing what I preach. I'm seeing that they practice what they preach, and we're all like an open and honest communication, with the whole community, and that's the ethos of our company.
I love that. No, I love that. And what do you think in terms of that misconception, though? Because people, I'm sure there's people out there where making 10, 20, 30, whatever it may be a month, 1,000 that is 10, 20, 30,000. They go, that's amazing. That is amazing. That's a goal of mine. But equally, I know there's a lot of people out there who are like, that's not enough. I want to be seeing 100Ks, 200Ks, 300Ks. Like, what are your thoughts in terms of what is not only realistic, but what's okay? What is actually enough to live? Have that freedom that people are after.
Let's take a break for a minute there, guys, because I want to tell you about one of our sponsors, Alpha Capital. Now, without our sponsors, it's not possible for us to host such incredible podcasts around the world and get the level of guests that we are getting. So again, thanks to Alpha Capital for sponsoring the podcast. Now, Alpha Capital is one of the best prop firms in the industry. So far, this year alone, they have done over $50 million in payouts, which is absolutely incredible. They have the very best infrastructure in place for longevity from an in-house broker, so they can offer the very best trading conditions and platforms that all traders love to use. They're still able to offer services to the US as well, so the US traders can still trade with them on particular platforms. They have institutional experience, so they know how to manage a prop firm correctly and have such an incredible team on hand. On top of which, they have both a pro and swing plan. So depending on your style and strategy, you can choose which one is best for you. Now you can use and get the highest discount available at anywhere using Riz25. So that's RIZ25 for 25% off all challenges. The link's in the description below. So let's get back to the episode.
Yeah, so if we reverse engineer this, I would say most recently, let's say the last 18 months, the last 12 months, my best month, I probably would clear like 21, 22K, something like that. That would be my best month. But then I look at it in the sense, well, what was my maximum drawdown as well? There's not been a month where I've lost more than £2,000, really. So I would look at it like that. I would reverse engineer it in terms of how much risk are you willing to take to hit those numbers? And also, can you control your jealousy, right? And this is something maybe a lot of traders won't talk about. I have traders and friends that trade Bitcoin and have rode this run up. And I've had traders that trade Bitcoin that sold at 50K. You know what I mean? No one's going to, if you trade like that and it works for you, applaud these guys, because in that run up, the most recent run up, how do you know where to get out of that if you're a long-term holder? Even now at 100K, how do we not know the way that the market's running now that you should take out your money from 100K and it's going to go back down to 50, or if it's going to hit 150K in the next 3 months? It's uncertain and it's random, and you have to make that decision and live with it. This is my decision and I live with it. That's the way I see it. So every single month, every single day, I give myself a risk tolerance. My job is to make as much money out of that risk tolerance as I can. If I hit my risk tolerance for that month or that day, I hold my hands up and walk off. And that's the only way that I've managed to make sense of this industry, because I've rode through the other problems of, adding to losing positions, letting things run too far and then coming back to break even because I was too greedy, things like that. I've gone through all of these things. So having it systematic and statistic based gives me the idea of where I need to take my targets, where my stop losses need to be, and it doesn't work every day. Like today's trade in Google, it pipped me out by minuscule amounts before it went off in my direction. But that's my choice. That's my stop loss. Yesterday, when I traded Tesla, it shot off in the first minute and I won within 30 seconds. And I was happy yesterday. I won twice as much yesterday as I lost today. Mm-hmm. And that's me. I can live with that decision and I'm happy with that decision. And that's what makes me consistently good, And there's more than one way to trade. Steve talks about traders who harvest profit that are more even on their risk to rewards, 1-to-1s or whatever, and they'll need a higher win rate. I don't. If I have a 50% win rate, anything above 33% win rate for me, I'm making money because my risk to reward is 2-to-1.
Mm-hmm.
That's it. So as long as I'm winning more than 35% of my trades, I'm either break even or in profit, and that's the way. The market owes me nothing, and I just try and live my life like that every day.
What was it like getting to the point where you could follow those rules? Stick to that 1 trade a day, stick to the 1-to-2 risk, like the rule, whatever rules you put in place. Because I'm sure there were times before that where you had rules, but you didn't stick to them. Yeah,
this is where ego is a good thing sometimes. So because I'm in the community that I'm in, they forced me to follow my rules. If I was by myself, sitting at home in my bedroom, not doing this with anyone, I don't know if I would have followed the rules as well. Now I can say I would, because I've gone through it and I've learned how successful this is working for me. So I can say that I would follow those rules by myself. But if I went through that journey and I wasn't by myself and I didn't have the community to lean on, because some of them, I have said in the trading room, the live trading room, look, I've lost my trade today. I'm so tempted to take another one, but I'm not, because you're all there watching me. I've said it. I say it to them. So, we're all honest. So
even that accountability is really helpful for you?
Massively, massively. If you don't have a trading partner or a trading mentor or a group of friends that you're trading with, you're missing a trick.
I love that. I've always thought similar in terms of some of these live stream traders, for example, probably have a better performance on stream than they might have off stream, simply because of that accountability, that viewership.
Yeah.
But talk to me in terms of DND Capital. Where did that come into your journey?
Yeah, so at the London Traders Show, not the last two, it was just over 2 years, just around 2 years ago now. I was fortunate enough to meet an asset manager from the States who came from America for the show, and we arranged to meet, right? So I didn't know why. So we messaged on LinkedIn, hi, see what you're doing, seen your trades, I like your ethos, blah, 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 can we meet up for coffee? That I just thought, okay, cool. I didn't think anything of it. He got to the UK and he said, look, I've tried funding 4 or 5 groups and it hasn't worked. He was like, they've all talked a good game and it's not worked. So he's like, I'm going to try with you, but because of my experience, I'm going to start really small. And I was like, okay, it was an inconsequential amount of money for me because of my trading account. So I was like, all right, we'll give it a shot. So myself, James and Oshin, we started trading with this 25 grand account, and we had risk on that 25 grand account, which was only 5 grand, right? So we was a very
sharing
small,
that.
Yeah, it was a very small trading account. I took the lead on it, right? And we started taking our trades, and we started roughly making about $300 a week, $300 a week, sorry, it's in dollars. And it got a bit consistent from the strategy that we were using. And then he upped it, and we took it to 50K, yeah? And then from 50K, we were using roughly about 10 grand leverage, but we only really leveraged 5 grand because it wasn't our money. We still didn't want to lose it. We're not idiots. And we then did it again. We started making about $700 a week, and then we did it again with 100K, and we started making about $1,250 a week and $1,500 a week. And we thought, right, this is working now. So I then left the job that I was working at the time, where we were coaching together, and I thought, that's it. I'm going into this. We've developed something. We've got backing now that we've never had in the past. We then under assets under management to its peak got up to 1.2 million. So we were trading and trading and trading, getting into casino money, getting leverage, doing quite well. We had a small party of investors and stuff as well, which I'm so grateful for. It was such a humbling experience because sitting there, having traders that I trade with, trusting us with money, thinking that, like, look, you guys start a company, see how this goes. And it really, really kicked off. It really, really went in our direction. But I think because of the psychology, the open and honest ethos, the money management techniques that we ran, it was a combination of all of those. And yeah, we've got 6 traders that have come off the back of this 1 year experience that we're effectively doing really well, producing really good results. We've got about 5 or 6 other traders that are middle ground, and a lot of them are new. So we've got a huge community of traders, but actually blooding the traders through to trading a fund is our job. That's what we're trying to do. But I can honestly say now we've got 6 traders that have come through that whole process that are going to be fully funded with us, and some of them are fully funded with us already. And we're going to go and take their results out and go out again and multiply this to try and get bigger and bigger. So we're a bit like the turtle traders in a way, but just a modern day version of those.
I love that.
Yeah.
So talk to me about performance. What does good performance look like?
Do you know what? I love you asked that question, because that's literally 90% of my job. Is I rock up to the session, win or lose. That's not a consequence of my performance. My performance is how do I handle myself throughout the day. So if I turn up and I've eaten well, I've exercised, and I'm there, if I execute my stop loss and I have no slippage and I've hit my risk limitation in a good way, that's good performance. If I've hit my winner and I've hit my target, that's good performance. Anything else in the middle is rubbish. So my performance is the key part to what I do, and I just try and keep it as neutral. And I've got a sign on my trading wall that says optimal performance, and I look at that before I start trading, and I think, am I optimal at the moment? If I'm not, how do I get myself in an optimal state? And I have a pre-trading question list and a post-trading question list. My pre-trading question list is like, have you meditated today? Have you visualized your win or loss situations? What stocks are in your watch list? What ones aren't? Am I ready to trade for the day, kind of thing? And I put them in percentages. So what's my energy level like today? What's my stress level like today? They're in percentage terms. Then at the end of the trading day, I come back and look at it. How well did you perform? Percentage. How good was your risk management? Percentage. How good were you at taking profit? Percentage. And I look at them all against each other, and I can always go back to them.
Would you say that the word process fits in there in terms of how you performed? The performance essentially is the process as well.
Yeah, because
so that's what Stephen essentially was really focused on, was process.
Yeah.
And the way I tried to define that or visualize the definition was like having some form of flow chart, but not just for your trading. But as you mentioned there, like, have I done this? Outside of trading, have I meditated? Have I done the visualization? Visualization is something I want to touch on in a second. But yeah, is that basically same terminology, but just different terminology, but same meaning?
Yeah, it's the same. But obviously these are just things that are good for me.
Yeah.
So I've got some.
That's your process.
Yeah, I've got some traders that are really funny. So like, James, he puts his trading hat on, he's ready.
Because he has a hat.
Genuine, it's a hat.
I love it.
I've got some other guys that, like Felicia, for example, needs a nap.
Really?
She will sleep before trading. And
I've heard that before as well.
I can't imagine doing that. Like, that's the worst thing for me, turning up with a coffee. You know what I mean? Like, it's little things that are just get you switched on and ready to perform.
That's what they say in NLP, right?
Yeah.
NLP, they talk about, using smelling salts, for example, especially they in NLP, it's a NLP technique, I think, which I can't say the word. I'll try on the pod. Neuro-linguistic programming.
Yeah.
I got it.
You got it.
The other bad thing is I say it all the time. Like, I can say all the words in my head, but when I try and say it, I don't know what happens between here and here. It just gets messed up. But I remember seeing it that in sales, for example, sales they use that technique to prime themselves into the sales mindset. Yeah. And I'm sure it's the same with trading. Like whether it's a song or a nap or the hat, for example.
Oh, you just reminded me of one. I listened to Prodigy. My energy levels. So when I'm making my coffee before trading, I have to listen to something up tempo, like some drum and bass or some Prodigy or something like that to get me ready. And I will always do that. So yeah, that gives me that energy, that buzz before I'm getting to trade. Not that I'm adrenaline fueled when I'm trading. I'm not. I'm quite zen. But I need those routines.
Yeah, you need that the blood flowing essentially to be alert essentially for your trading.
Correct.
But in terms of performance as well, on a trading performance perspective, in terms of percentage return, what does that look like from the fund perspective?
Yeah.
What is it that you're trying to achieve? Yeah. But on both sides, profit and then drawdown.
Yeah. I have no goals. I don't live my life with goals at all. I trade every single day to do what I can every single day. So I take what the market's going to give me. So I rock up to the day. I know how much money I'm willing to lose. I don't know how much money the market's going to give me back. I will take the trade, I will hit my trade, and I'll keep doing that every single day. The day that stops working is the day that I'm done, right? So my balance is trailing. So roughly, if we want to talk about average performance, something like 6 to 10% a month is something that I'm happy with. But there's been months that I've taken 20%. So what I'll do then is I'll shift it up. So I've never risked more in my professional trading career than 20% of my account balance, ever. I would never
When you say that, you mean not in one trade, you mean
drawdown
maximum
overall. Drawdown, yeah. So if I'm trading with 100 grand, I won't go below 80, yeah? And even as I'm getting into profit, I'll do the same thing. So like I said, I'm in casino money.
So we won't go from 120 to 100.
No, I will always shift that up as that time goes on. And until the data tells me that that stopped working, so we evaluate our trades every 50 trades or so, or like some people do it in every 20 trades, but for me it's every 50 trades because of the law of averages to stretch out the data. If my trading performance is poor within that time, I'll start to have a think. And don't get me wrong, there were times during this journey where I was very, very close. 3 times in this journey over the last 18 months.
The DND journey?
Yeah. I've been through 8 losses in a row trading.
Interesting.
And then 8 losses in a row, and then maybe 1 or 2 winners and another 6 losses in a row. So I've been getting close to my drawdown sometimes. And then I've adjusted, and then I've caught back up, and then I've gone on to go it. So if you look at my equity curve, it's like a chart. It's very much like a chart, but there have been some very close calls to get into draw down 20%. And again, having to do this in a live trading room environment is horrible. It's absolutely horrible, because I say to them, I've had a full losing week, obviously taking 1 trade a day. You know, if I don't get better next week or the week after, I'm going to have to stop trading to allow the rest of them to continue to trade, because we're a fund. We split the money. So I hold myself in the same standard as them. I would then have to go back to the drawing board, trade the simulator again, trade small live again, and then level up again. I do the same process with everyone, including myself.
Wow.
Yeah.
Is that level of quality control of yourself, as well as others, but also putting it on yourself as well? Do you think that is part of the, not secret, but is that part of the success, the part of the reason why you perform the way that you have and continue to perform the way that you do, is because of that focus on those details, the focus on excellence, essentially?
I would say so, but then it takes out the outstanding returns at the same time. As it keeps you consistent and good, you're never going to have an outlier that produces 50% in a month, or like it's a big.
Well, this is what I was going to ask you about.
Yeah.
So obviously you mentioned about having these losing streaks and then a couple wins and back. So I'm guessing you keep your risk static.
Yeah. That's the problem, if you want to call it that, with the way I trade. But I accept it. I won't be able to live with myself if I screw up the opportunity for the other traders. Do
you use that as a rule of thumb across the fund, or is that a rule that you have across everyone?
Yeah. So all of our traders, we agree the risk limitations per trade and their account.
Okay.
So it's all automated. So if you came to me as a trader and you said, okay, I'm willing to risk $1,000 a day, and then
when I say that, what I mean is everyone has the same rules, or you will speak to the trader and give them the rules, and they just have to trade within that rule.
Yeah, because they're all at different stages of their career. So the better traders are up to like $1,000 risk a day. The smaller traders can have anything from $50 to $100 risk a day. So as they're getting through their journey, we adjust the risk parameters, and they have automated liquidation on their trades and automated liquidation on their account. So if they ever achieve those levels, their money gets pulled from them. So that's automatic, and everybody agrees to that at the beginning, and otherwise they can't trade with us.
Amazing. What is the setup like for them in terms of salaries or profit splits, etc.? All
of it is profit split until really we get to casino money territory with the trader. So if we get a trader, so we've lucky enough to find some good traders, some really, really good traders. And what we'll do is we up their funding. So for every $1,000 a trader makes for us, we'll give them another $10,000 to trade with. And I don't know any other company in the UK that does this. I know there are some, like DND Capital in the States, and there are a few others around the world. But we're the only company that, like, for example, if you make $1,000, we'll give you another 10. If you make another $1,000, we'll give you another 10. As soon as you're out of your own money, your first loss risk money, you're free with us, and we can change it. We'll take all of the risk and then split the profits 50-50 if that's what you want. Or if you want to keep trading how you want to trade and take 80% of your profits, you can. But most people decide that we will take the risk on the trader, because then it's easier for them to trade. Psychologically, they're a lot better. But we need something out of that because we're funding them, right? So everyone, and our funding is essentially at this stage unlimited because we've done okay. So we're up on that level, and everybody agrees to those terms. So it's an interesting model, and it's not for everyone, because I do understand at some stage, and this is the case for any business, a trader could do really well, earn enough money, and get off and trade on their own in the Bahamas, right? Which is a risk for us, but every company has that risk.
Well, I think in terms of community, in terms of the setup that you have, the quality that you're trying to produce, similar as you mentioned, S&B Capital, it creates a family-like environment, an ethos, a brotherhood, wherever it may be, whatever terminology you want to use.
Yeah.
It creates that closeness of where, people, there will eventually be people who do want to go, even if they have that feeling, but they'll still always be close to you.
Correct.
And you still won't have any, sour taste in your mouth, because you're close to them too, and you love what, the growth that you had together.
100%.
What is the process of you finding traders, though? Is it purely you're training them up and then getting them, or are people able to bring a track record to you and you assess it from there?
Both. So if somebody brings a track record, what we need to do is assess their risk. Yeah. So we put them on a sim, see how they handle the risk, get them on a small live account, see how they handle their risk, and then go on. So we have to always do that. In terms of finding traders, really, it's funny. We've got traders that come from builders, plumbers, any job really, policemen, that come and work out whether they can trade or not. So my favorite kind of trader is somebody who's street smart. I do value people who are book smart in a different way, but I think like somebody, if I could describe them as a market trader selling apples and oranges that work out the true value of things, are my favorite type of traders, because you can smell if something's not valued correctly. I worked in a sports betting environment, which we haven't spoken about, through the probability stuff. And
I needed to come to that, but we will.
The best people in that environment were the ones that realized that the odds were wrong. When the odds were wrong of pricing a football game or pricing a tennis match or like somebody playing golf, that's everybody piles on so fast, and they make really good traders.
In terms of probability, seems there though, probabilities wise, like what can people do to help train their mind in thinking in probabilities and trading with probabilities? Yeah,
so there's a thing about this. So there's applied probability and theoretical probability, right? Applied probability is somebody that can play poker, somebody that can who can look at sports betting, things like that. That's so important to trading, because like we talked about going against the grain and things like that. Like if you're looking at a chart like the S&P 500 at the moment, SPY, whatever, QQQ, the odds are it's going up. Like you just stare at the chart, the odds are it's going up. You then as a trader have to work out, well, how am I going to establish myself and position myself within that to take advantage of that trend or whatever it is. So the probability you've got straight away, you're looking at a chart, it's 45 degrees from left to right. First of all, the probability of it going up rather than going down, you're already winning. It's there, it's showing you that. Second thing you've got to do is enter the game and work out how you can take advantage of that probability slant and get an edge in your favor. That little 1-2% edge in your favor is enough to make money in the market. So every day, if I'm in a bull market and I go long every single day, only an idiot's not going to lose, lose all their money, in my perspective, because you just have to make sure you've got the correct stop loss. And even if you just flip a coin every day to go long or short, you're going to make money at some point. And that's the kind of games and examples that I do with my traders, and also with some of the interns that I've had in the past. We used to roll dice, we used to flip coins, we used to play cards just to test the markets, apply those principles to the markets, and it works. There's nothing else, just raw probability data works. Only thing I have an issue with is like those MT4, MT5 brokers or different brokers that change spreads and change commissions. That skews the odds away from you. So we trade via an exchange, so we've got no spread on our trades, just literally the buy and sell on the New York Stock Exchange, and that makes it fair. Whereas we pay for that, obviously, the fees and commissions, SEC charges, whatever, but it's not the same as trading on an MT4 and MT5 with a spread and a commission. And the more people come to us to trade, the more people actually realize that like your odds are fairer on an exchange than they are through a broker. That messes around with this.
Because it's centralized.
Yeah, and
same
also
nature with like futures wise, it's like centralized versus CFDs. Like people like, I remember a lot of people using level 2 data, right, on futures.
Yes,
So it makes sense. It's centralized. You can trust that data. And I remember one guy tried to launch a course talking about level 2 on Forex. And I was like, what does this mean? That doesn't even make sense.
Yeah.
And I'm very limited knowledge on that stuff. But that already, I was like, that doesn't make sense. Because the whole point of a law of futures, at least to CFD traders who trade indices, for example, they should just trade futures because it's centralized.
Again, this is something a retail trader is not going to know, and they have to be educated on. So, a big part of our education when we get a really good retail trader is explaining why you should trade like DAX mini futures versus trading DAX on IG or wherever the hell it might be. What's the difference in trading them? One might be more expensive, but even though it's more expensive, you've got real data, real pricing. You're playing on the same field as Goldman Sachs, as JP Morgan when you're doing this. So the probability of you winning is much higher straight away off the bat than it is with something that's got a completely unknown variable of a variable spread and a commission. How are you going to factor that in? That's like when you're sports betting. If you bet on Liverpool every single game, yes, Liverpool are likely to win every single game, but there's a spread there. Why don't people do that? Same thing in the financial markets.
One thing I wanted to talk about as well though, is that transition though. Because seeing as we're on that topic, I think it's very important. Because you didn't start with where you're at now, right? Stocks. You started with investing into stocks.
Yeah.
But then you've been through the whole journey, right? No, you've been through Forex.
Yeah.
You've been through futures.
Yeah, I have.
You've been through options.
Yeah, I have. Yeah, because like any retail trader, I was chasing the Holy Grail.
Yeah. Well, especially in the UK though.
Yeah.
In the UK, Forex is massive. Like huge. Yeah. I don't really hear about futures, stocks, or options in the UK.
Yeah, I mean, in trading FX, it was a really ego-driven lesson that I learned because I was a forwards and options broker in Forex. So I used to get access to the flow data when I was trading, at the companies that were trading physical Forex. So like, for example, like Thai baht, Naira, Euro, we had a desk for each individual currency. And I used to get the flow that was coming through, and I used to be able to see the transactions go into the market and see the difference that those transactions made in the market. So I then automatically thought I should be better at it. So trading all the currency pairs. But the way I see it right now is that if you're trading euro dollar, you've got euro buyers and sellers, you've got dollar buyers and sellers. There's 4 variables. If you're trading gold, gold goes up, gold goes down. If you're trading stocks, stocks go up, goes down. Same with oil. But with euro dollar, you've got both sides that you have to work out. So there are more variables in the FX markets for me than there is just trading Apple up and down on the day. So that's what I find a bit tougher in FX markets. The other thing about FX markets is that I employed a strategy and I created a strategy that was performing averagely, and I was making a small amount of money. Again, this was year 4, year 5 into my trading journey, mainly about year 4. As soon as I picked up that strategy and moved it into stocks, it started making money. And I hated that. It really bugged me because I was like, I've just developed a 7-year trading career in the FX markets. I've worked in the inside and out. I would call big institutions making their orders, selling their orders, buying their orders, selling them treasury systems and stuff like that. And I can't trade that market. I was like, it really bothered me because I knew about central banks. I knew about interest rates. I knew about inflation. I knew about economic data, and I couldn't crack that market. It just worked in stocks that I knew nothing about, but it was because they trended well. And I just had to accept that I could only trade that well in that market. I wasn't good in a two-way market like Forex, but it worked in stocks.
What are your thoughts, though, in terms of generally for the trading community? What do you think they should be doing? Should they be looking at stocks? Should they be looking at... Where do you think really better performance might be found? Or does it not matter? The market is more considered to your strategy and your personality?
Yeah, so I think the personality thing's huge, but I think trading FX is the hardest market to start with.
Really?
Personally, I do, yeah. If we go and pull out a weekly chart of the S&P 500 or Apple or Nvidia or whatever you want, and they're going up really, really, really nicely over that time, if you go and do that in Eurodollar or you go and do that in GBP USD, you've got a completely different looking chart. Even if you add gold in the mix, gold trends up quite nicely, doesn't it? Yeah. So that's your answer. Like only, without being bad, only an idiot would fight against that. Like really, it's your ego. So, people, it's fashionable in London, in the London session, in the London markets to go and trade FX because that's where the volatility is. But you're not helping anyone. It's not working. It's really, really, really tough. And also, like you said, it's an OTC market. There's no data from that market that you can get that's reliable. You're relying on liquidity providers and the brokers giving you the best bid and the best offer. All of that data is hidden. in stock markets is not hidden. So yeah, I'm completely biased from that perspective, but I have got traders right now currently that trade the FX markets and make money, but it's just not me.
Well, that was one question I wanted to ask about DND, to be fair. It was if you had traders who traded futures or FX or whatever, would you still take them on board?
Yeah, we do. So they're basically like the European session and the London session, they start at 7:30. So normally it's 7:30. They trade together up until 8:30, and then they post their trades live in the trading room, right? Throughout that whole time. Then the markets go a bit quiet, whatever, and we come in at 2:00. And then we trade until about 4:00, and then they go quiet again, and we normally have a session at 7:30 in the evening. So there's periods throughout the day where the chat room's busy and where it goes a bit quiet. So yeah, they do talk about those markets, but where the success comes in the morning as well is the DAX as well, gold futures, oil futures. So they do trade other things, copper, Ross trades copper. So we do have multiple asset classes that go there, but none of them are more successful than any of the others, which is interesting. As a company, I would probably say stocks is our main product because of the liquidity that comes in the US. It's the most popular market. It's the quickest moving market. It has the most participation. And it just happens to be that way. Even the swing trades, they do really, really well. So we've got a swing trading community as well. And they do really well in stocks as well as FX and stuff. So it's a complete mix. It's multi-asset.
Yeah. You're more bothered about performance by the sounds of it rather than like assets, for example.
I am, but we are seeing the fund growth happen more in stocks than it happens anywhere else.
No. It's interesting you mentioned that because one particular trader who was part of S&P's team as well, still is to be fair. His name's Lance. And I remember watching a podcast of his and he talked about the only edge he can find is in small cap stocks.
Yeah.
If anything. So, it's small caps. Again, and the interesting thing is from being, again, UK and just Forex, retail, pure retail sort of background, literally all I ever knew was Forex for so long.
Yeah.
Until I really got into this side of the industry in terms of doing podcasts and then meeting traders do futures.
Yeah.
Options is like a whole different animal to me. Like when they talk about Greeks and this deltas,
it's not as complicated as it seems, right? But with going back to the small caps, when I was writing for Kitco, they have junior miners and big miners that they look at, and I was thrust into that world as well. So like Greatland Gold in the UK, and there's a few other companies that are small cap UK gold mining companies and general companies. They have a huge following. I did really, really well out of a company called Cas Minerals, and I'll tell you how I found them. So I went to the Shares Awards with TradingView. I was on a table sitting next to the founders of Cas Minerals, who were picking up an award for being best small cap stock of the year. I got to talking to them, and they had amazing concepts. So what they were doing is in South America, they were shaving down copper, putting it in the big containers, shipping it over to China, then smeltering it up into copper rods for production. But all the other companies at the time were sending the copper rods in the containers. So they were able to fit 30-40% more copper in their containers. That was at the time, that was their thing. And I thought, brilliant, put some money in it. Happy days. They got there was a merger and acquisition, stock price shot up. So I think the technical knowledge that you need for small cap stocks is slightly higher, unless you're going off the back of like pre-market volume or pre-market volatility data and volume data. You can get to see what's in fashion, like the AMCs, the GMEs, and all of those GameStop and all that kind of stuff. Like you can make money from those, but if you know the ins and outs of certain markets and you think they've got a good concept, it's only a matter of time before they blow up sometimes. Yeah. But then there are big pump and dump schemes as well. Like I think they were called Twingo MICT or whatever at the time. Them as well. They had really good press. They were building and building and building, and it was fraud. So you get your problems with small cap stocks as well.
Of course, yeah.
As well.
Definitely. You get a lot of pump and dumps with the small caps.
Correct, which is I don't have time for that. I think
it's interesting. You're Timothy Sykes.
Yeah.
His whole strategy.
Yeah.
Is identifying pump and dumps.
Yeah, which is brilliant. It's really, really good. But again, that wouldn't fit, I don't think, my money management ethos. Sure, yeah. But like I said, I really respect people that find that edge.
Yeah.
And that's it's just really finding that edge all the time. It's awesome.
Definitely. I've been looking at this
Yeah.
throughout the podcast. If you haven't used it, it's about to run out of battery, so I thought we might as well touch on it, which is I have some quotes. Quotes that define Rajan's journey. For a minute there, I was about to quote you, but it's not you. This is apparently defining your journey. Okay. Maybe his quotes from you. It says, your ego has no place in trading. Markets don't care about your preferences. You follow what works.
Yeah.
Right? What do you think to that?
Yeah, I agree, because I don't think, like some people say the market's trading against you or whatever, or you're always on the other side of the market. I try and think as the market being as neutral as possible, and then it's you fighting against yourself. So if you win that battle between yourself and how you're perceiving what's happening with the market, I think you'll end up conquering the markets, because it's there and it does whatever it does, whether you're in it or not. You know, so like Apple can go up whether you're in it or not. It's got nothing to do with you. If you're in it and you choose a certain amount of risk and you lose, you have to hold your hands up and say, I chose the wrong amount of risk that day. So
the market doesn't care about you, essentially.
It really doesn't. Especially when you trade how we trade on the exchange, you really see it, because there are traders that can hold on to trades much better than me. So we've got certain methods of profit taking, and there are traders that can really run a trade 8 to 1, 9 to 1, and I can't do that. Just my composure when I'm in a trade and I'm winning is statistically, it averagely gets to there I'm coming out when I hit the statistical average. I can't watch an out of a fat tail trade go really far, because I just don't have that composure. I'm try and train myself to do it, but I'm not there yet. So that's me. But the market doesn't care about that. I care about that. The trade could hit 10 to 1. I can't handle sitting in it to 10 to 1. I need to take my 2 to 1 and go home. That's me. So that's how I know that's the truth.
Well, that's kind of what this says on the next quote. It says, I'm comfortable being uncomfortable. Trading is about staying composed, whether you're winning or losing. Yeah,
definitely. I think people handle losses better than they handle gains, in my experience, in trades, individual trades. I think anybody's happy, like not happy, but like they can understand when something hits their stop loss because they've predefined it, and they're like, yeah.
Well, you'd hope they did.
Yeah. They're like, okay, I put this in, I've lost my $100, I've lost my $1,000, whatever, I'm done. Yeah. But when something's going up and they don't know how far it's going to go, that's when I see them get more uncomfortable, because it's the unknown and the uncertainty that they can't handle as humans. Yeah. Whereas on the downside, they can handle the uncertainty and randomness because they've set a stop loss. So the good traders that I train, I normally see them really comfortable with losing money, and they get more uncomfortable with winning money because they think, oh, this could be the winner that makes me the millionaire. Every time they think that. So
it is an interesting concept. One thing we haven't touched on, which I think is important, is edge.
Yeah.
Because one thing, from speaking to these incredible traders such as yourself as well, and some traders that you put me onto as well, so thank you for that, is edge. Edge is like the reoccurring theme that sticks out. Like and some go to the point where they say like edge is the number one thing. Like if you don't have that, it doesn't matter how good your psychology. Like, and also they say that some of them say trading psychology is bullshit.
Yeah.
It's the edge, and what they normally mean by that when they break that down, because some people get very in their feelings when I say that, or when they say that, is that a lot of traders use it as an excuse.
Yeah. Trading
psychology. For the fact that they don't have an edge, that they're trading without an edge. So that equally when they take these losses, or whatever the situation may be, they go, oh, the market, or my mindset can't handle this, blah, blah, blah.
Yeah.
But in reality, they actually have no data and no edge in the first place.
Yeah.
So if you fix that problem, a lot of your psychological issues then become real, the ones that do identify themselves, probably more personality-based or risk-based, whatever it may be. Versus, I FOMO, my greed, or I just revenge traded.
Yeah.
Because you now understand your data.
Yeah.
What are your thoughts when it comes to edge?
So if anyone asked me what my edge is, it would have nothing to do with trading, and I would say it's my discipline. So there have been 3 or 4 times in my life where I have fundamentally changed as a human being, which means that I am capable of changing, right? So when people say, oh, like people never change, that's not true. I'm a human that can attest to the fact that somebody could change. So one of the biggest ones for me was when, I started training and exercising and I lost weight. So through that period of time, for me to prove the discipline that every single day I could eat well and I could exercise well every single day, if I can do that, I can follow my trading rules and I could set the same stop losses and targets every single day and do the same thing every single day. And the results end up taking care of themselves. So that's where my edge is. My edge is in my discipline. Regardless of what trading strategy that I'm using, if I can execute it perfectly, as long as statistically it has an edge from the testing that I can do, being, designing trading systems, I then can play out that edge as long as I have the discipline to play out that edge. And that's the key for me as a trader. Any system, I know I can work that, whether it be an RSI-based system, a MACD-based system, a price action-based system, a statistical-based system. As long as you sit down and do the same thing every single day with a stop loss and a target and you walk off, you can achieve it. Trading, to me, that's what achieves trading success, nothing else.
I love that. And one interesting thing I did want to talk about as well. It's a story I've thought about in my head a lot, periodically. And it's nothing to do with really kind of... It's to do with us, more than likely, if anything. And it's like where we actually met, where we worked, there was this ethos. Technically speaking, I don't think you really worked there. It was more they robbed your articles and therefore they were like, oh, please don't, just come by.
Yeah.
But anyway, it was one of these FX, sort of retail environments. But anyway, the main thing I wanted to say was there's a big ethos there, right? The people who owned it was about image.
Yes.
Right? Image. And they constantly tried to push me to buy Rolex or some sort of watch.
Yeah.
And I've never really been into it. Still to this day, not really into it.
Yeah.
And the big mindset behind it, because I used to say like, why? And they'll be like, oh, so, I can take you into meetings and people will respect you more.
Yeah.
And my reply was always like, but people respect me now.
Yeah.
So they respect me.
Yeah.
I don't need... Anyway,
Yeah.
they kept trying to push me. I always rejected it. Ended up parting ways anyway.
Yeah.
Years later, for the work that I've done with the podcast, one of our guests, Umar Ashraf, then gifted me this watch.
Wow.
And it always sits in my mind it's just a mad thing where it's like, these lot had this different mindset where you should be respected because you have one.
Yeah, correct.
Right? So that's why you need to get one.
Yeah.
And then it's always like played on my mind where it's like, I stuck to my values, thankfully. And then someone ended up getting me one because of the respect.
Yeah.
Do you know what I'm saying?
Yeah.
And I was just like, it's crazy. Like, and that's what I love about you as well, in terms of like you, especially in this, the UK FX space, like you have gone down a path which has been super professional and super, genuine. And now you're going into a path as well where you're creating hopefully an incredible fund and doing it in such a genuine and wholesome way that I think is going to perform extremely, extremely well. And I'm thankful that we get to do this podcast because I think more people should know about it as well. Because as you know, most funding, should I say, that people are aware of now and used to are just the sort of, I don't know what you would describe them as. Because people took the term prop firm to them, but in reality it's not the right firm, the terminology. It should be more evaluation firms or simulated funding companies.
Crazy, isn't it? Like, so going back just to unpack that. So, so what happened? The actual story was, all the stories were, is that my articles were being taken, whatever, it was fine. Then when it was brought to my attention, they then offered me money to keep producing them because I was obviously there. So, holding my hands up, I didn't know at that stage what this company was like and their ethos about it. So, called in for a meeting, met them, blah, blah, blah. Didn't know what to make of it at that stage because I don't know. It's very hard to know if somebody's telling the truth, which is why I feel so bad about the retail industry, right? Then as time went on, literally my ethos has always been like, I need to be able to go to sleep at night, right? So even if this situation is bad, if I'm producing good quality stuff, the people will learn something there and the true colors will shine through at the end of the day. So if I'm giving people the information they need to get to become successful or get some insight into this industry, I'm going to do that, and happy days. They've learned something. Even if they're in a bucket shop, they've learned something from me, right? So that was the way it went through. So then after that ethos of, having the watches, having the cars and all that, I was watching that from a distance and I was like, oh my God, like what is going on? I didn't know whether to run for the hills. I had no clue. What I found really interesting about the situation is how many people were drawn to it.
Yeah.
That was insane because I have the history of writing articles for different companies, writing exactly the same articles, sending them to one place and it getting 1.2, 1.3, 2 million views, writing the same article, giving it to somebody else and only 1,000 people looking at it. There's no difference between the articles.
Yeah.
So seeing the marketing and the promotion and how that all works based on image, based on culture, that was an eye-opener for me, and I found it amazing. But why people fall for that, same thing with Andrew Tate and all this kind of rubbish. Why people fall for that and how that works is astounding. I haven't got my head around it, and you don't know what to do with it. You really don't know what to do.
I think it plays on people's insecurities and people's hopes and dreams,
Yeah.
So you show people what they want. You tell people what they want to hear. You show them what they want to see and what they want.
Yeah.
And you tell them it's easy because that's what they would love to believe.
Yeah.
Not even if they don't believe it, but they would love to believe that. Everyone would. Everyone would love to know that trading is easy.
It's funny, right? Because in reality, if you do it well, some people describe it as the hardest way to make an easy living, right? And I think that's true. Like I genuinely trade for 40 minutes a day. Yeah, I do a bit of analysis work beforehand in the group and talk about what's going on in the markets. My actual trading lasts about 40 minutes. So I could make money and live off 40 minutes a day work. I could. But it's taken us so much time and so much skill and so much effort to get to the point in which I can do that now. So it's not as easy as I make that sound. So, but if somebody's coming in and selling it like that, there's a problem. There is a real problem with our industry and describing it like that. But I don't mind because as well, it led you to this.
Exactly. Yeah, no. I've always said the same thing. I've said the same thing where it's like, I wouldn't change anything, even no matter how bad it was or etc. Because I wouldn't be here now, and especially now in particular, taking this verified trader route, etc. For the same principle. Like my whole ethos has been to try and provide value and help everyone.
Yeah.
Unfortunately, sometimes not that you're not doing it, but it's like you can do better, right? And you might not see that straight away. And thankfully, I've got good people around me, and plus I like to reflect on how can I do this better, etc.
Yeah.
And then having people like yourself and other professionals to help refer other professionals and so on, because the one worry that people might think or risk is like, oh, you go verified, you're gonna run out of traders straight away.
Yeah.
But the weird thing is now that I've started.
Yeah.
There's loads. There's loads of verified traders. Loads of avenues that you can go down.
Yeah.
You're just not looking.
Yeah, this is the thing, right? So let's say we talk about the journey of where I went from. So, from Man to TradingView to Kitco to Zero Hedge, to FX Street, to doing this, for all those things. The sense that you get from body language and from talking to people, the way they talk about trading, their passion and all that kind of stuff, like you get to know people, and then the thing is that they move on. So I've had traders that I've worked with who are at Total, Shell, Goldman Sachs, I've got traders at JP Morgan that I know and things like that. And like that network, because if you're genuine and they stay genuine and whatever, you get to know everyone, and that's how that network builds up. Because like now, like a good friend of mine is head of trading. He's the director of trading at JP Morgan, right? Wow. So I'm sitting there thinking like, well, look, if I'm not sure what's going on, what's his view? Like I'll go and have a coffee or a beer with him and we can discuss what's going on in the markets. And is he seeing things how I'm seeing things? Is there a disconnect here? And we wouldn't have that. If there wasn't a genuine connection, and he thought I was an idiot and, whatever, I'm a jobber, and vice versa for him. I thought they were just taking fees off people. It wouldn't feel like that, would it? But you gauge that body language, and the same thing with you. Like when we had that situation, I would sit there, and there were people that would come to me and really want to learn and forge a career out of this industry. And I could really tell, which is why I got, the red flags, and all that kind of stuff. But there were people that I still keep in touch with from there. That asked me questions about trading, and they're still trading, right? And that was their entry into it, and I'm happy for that, So I think finding that happy medium of working that out and finding the right people is probably the key, and it's the best part.
And the only way to find the right people and find the right path is to go through it. Like to think that I'm only going to be able to find the best path straight away is. It's a bit naive, especially in this day and age. Like most people find trading from like IML. Like the amount of people who came in through IML, for example, which thankfully I think is gone now. But regardless though, The amount of people who came in who have gone on to actually become really great traders, but that was their entry. It's just a prime example. Like, you know, something could be seen as negative, but that was why I've seen the, who was it? It's I think the founder of Think and Swim or Tasty Trades. Tom. Yes, Tom. Hopefully we'll be interviewing him soon. But I was watching a podcast he was on, and someone asked him, like, what do you think to Nancy Pelosi, you know, doing insider trading? And he was like, I don't care. Like, it doesn't matter. Like, all I care about is the thing that gets more people trading. That's great. That's what I think. That's what he said. Is that I think anything that gets more people trading is amazing. Not that he was referring to IML or anything like that, but what I'm getting at is that I think it's a similar principle. It's like, okay, cool, that might be a negative thing, or you might deem it as negative, or it might not be the best way to start. But if it's getting more people interested in trading, because I think personally, regardless of whether you become a trader or not, having knowledge of the financial markets is very powerful regardless. Even if you work a 9 to 5 and that's all you do and you're happy with that, but by having the knowledge of the financial markets, I think one very important thing is that you will not panic when you're seeing all these headlines, right? Especially recession headlines or crash this or crash that, because you understand all the market mechanics and what's going on. But more importantly, on top of that, is even if you're not a trader, by having that knowledge, you can make sound investments for yourself.
You can.
Which can pretty much, if you do it over a long period of time, and again, time horizon is very important, which I think we should talk on. But if you do it over a long period of time, that can create the financial freedom anyway, just from the investment side.
Yeah, so there's a few people I will introduce you to, like David Bell, Pick, Michael Brown, like a few of these guys, right? And they came into the industry roughly at the same time as me, and we all kind of are aware of each other. You know, I wouldn't, you know, we're not close enough to say, oh, like we're friends. But from a distance, because we've all worked at rival places or different things, on LinkedIn, on Twitter, things like that, I've seen them stand the test of time as that goes on. The amount of people I've seen drop off during that period of time has been amazing. But they all of these guys that I just mentioned are still in the markets and still doing good things, and, you know, are producing reports and trading themselves, you know, and they wouldn't have lasted that long. And the quality of the information that they're giving out to this day is still such a high standard that you know, you notice it throughout your years. So like now, if I'm like, you know, thinking about the Fed or something like that, you know, Michael Brown works at, I think Pepperstone, one of the brokers. And I just searched his name on LinkedIn. Well, oh yeah, he's put something about the recent NFP report or the FOMC report. You know, is he in alignment with me? And I know I can trust it because I've been working in the industry the same amount of time as he has, and I've been reading his stuff the whole time, right? And that element of it is so important. So yeah, I fully get what you mean about the people dropping off and the trust factor, and that's how you develop it. The you know, at the end of the day, if somebody stands the test of time and they're still here, they must be doing something good in a way, but you still need to check them out.
Definitely. In terms of time horizons, what are your thoughts in terms of time horizons? We know that coming into trading, most people will come in with a short-term time horizon on their trades and their performance. Yeah. We know that is not the case, and you should have a longer time horizon. Yeah. But in terms of your trading performance as well, like, so a big question we get, to be fair, is like data. You mentioned about a lot of people might review at 20 trades. Yeah. You choose 50. Yeah. In terms of actually identifying an edge in the first place, like whether it's, I know we've talked about back-tested data versus live-tested and so on. Yeah. But like, what are your thoughts on that? Like, how much is, you know, a good amount of data set to make an informed decision, or at least start to make an informed decision on? Yeah. So in my last firm, I was a swing trader, so I was known for it. So I used to hold trades between 3 and 6 months at a time. Oh wow! And compound on them as they went well. So my best trade to date was the S&P 500 prior to COVID. So, you know, 2019. Leading up to that, I had like 8 or 9 positions in the bull run, and every time it broke the moving average, it broke back above, I was buying again, and it happened about 6 times during that run. I actually spoke to Axel about it the November before COVID hit. And he said to me, oh, I think it's going to turn now. This was just before COVID, just because of divergences and stuff. And I was like, well, I don't really mind, because all I've done is it kept an 8% drawdown on the trade. So if it dropped 8%, I would get knocked out of it automatically. So I just had that running. Lo and behold, COVID came out. It took me out. Then I moved to, I was in the firm, the next one, through COVID. And the next bull run happened. And I did the same thing on NEO, Apple, NASDAQ, and another couple of companies. And again, that actually enabled me to earn enough money to help open this company. Really?
was that trading account. I liquidated the trading account, used the money to survive and invest in the company to open the fund. Anyway, then when we got access to the data that we have access to now, I day trade only. I don't swing trade anymore. So if you were trading with a retail brokerage, I believe that they can't manipulate the price of daily price data at all, really, apart from the overnight fees and charges and maybe the spreads around earnings. So it's an edge. That is, for me, if you're a retail trader and you're trading with any of the retail brokers, CMC Markets, IG, whoever you're trading with, you have to trade long term. You can make money long term, because I've done it and I've seen it and I've seen other traders do it. But day trading is harder when you're trading with a retail broker. But when you're in a professional futures environment or stocks environment that is professional, you can day trade and do a lot better. So it depends on your infrastructure as a trader. I believe it would be very, very hard to day trade with a retail broker, but it obviously can be done. But I think it would be super, super hard. I would trade futures, trade DAX, oil, gold, copper futures, because that's achievable with the amount of money that people would have as a retail trader, rather than day trade FX or stocks or whatever through a retail brokerage. So I completely changed from swing trading to day trading because of my market access that I had. So my answer would be, is if you're a retail trader, I would focus on swing trading. If you're turning into a professional trader, only really day trade if you have the correct market access.
I love that.
Yeah.
One thing I want to ask as well, and we'll do some quick fire questions. So this one is, what would your message be to these traders, who are really just only focused on, it's a mass amount of the retail market, I would say, are only focused on these evaluation companies, right? I think they serve a purpose.
Yeah.
But what would your message be to them to focus on in terms of trying to build an actual trading career, or at least, have a profitable, consistent, even if it's a personal career?
Yeah, so I would, from our perspective as a company, there's one thing that I just don't understand. Okay, so if you're trading a funded account and you take your funded account to, let's say, you start off with 100 grand's worth of funding and you take it up to $1 million worth of funding, why would you ever let go of that trader if they hit the trailing drawdown? They've just proved they can take you from 100 grand up to $1 million. Just because you've hit a drawdown, why would you let go of that trader if you were a real company? Okay, our company, if a trader comes to me with 100 grand and they take me up to $1 million, even if they take it down to 500 grand, I'm keeping them. They've just made me 500 grand. That doesn't make sense straight off the bat. That's my first problem with it. The second problem with it is, if it's not real money, and you're trading with simulated funds, why are you being charged a commission and a spread? It makes no sense. That to me makes no sense whatsoever. They all say it's simulated funds. You get an MT4 and MT5 account, which can be, MT4, MT5 can be manipulated in certain ways. You get all of the data behind the scenes as well. I just don't understand this thing. But it is what it is. With the My Forex Funds thing, we had accounts with them because it was very early on in the industry. So Ross, Oshan, James and myself, all together, it totaled way over being $2 million with My Forex Funds that we traded it up to. We all opened the evaluations at the beginning and kind of passed them, and we all built up together, trading together. And then when that cut off, we all sat down and thought, look, we need to look around. Now, there are some really good funded account providers. I have definitely seen some that pay out regularly, like Alpha Capital. Like there's a few other really good ones. I can't remember the names off the top of my head. Some are now moving into the future space, aren't they?
Yeah.
And they're legitimizing their businesses, which I think is brilliant, because they've got the customer base. They can now go into a legit area and they can provide the correct stuff. So this is all an evolution of an industry, isn't it? It's like finding out who can last the test of time. But My Forex Funds and Surge Trader, that was an unsustainable situation. I really struggled with the ethics of the business, even though I did it myself. I passed it. I was just trading the indices with them and stuff, and I passed them because I was trading like DAX, and I got a few good long positions. The other thing is that I've had a trader, 2 traders now who were in our group that have passed, made money with them and been refused payouts. So one of my traders did really, really well, trades gold only, asked for a payout and they refused it and said that he was arbitraging. Honestly, the guy doesn't know what arbitraging means. so he didn't get his money. They closed his account. Another trader of mine did really, really well. Again, I'm not naming any companies or anything. Made a lot of money, 11% over like a 4-month period. Got to the point of a payout, and they said, "No, you hit your stop loss 4 months ago." And she was like, "What? Like, why didn't you tell me 4 months ago? First of all, second, can you show me it?" And basically, they couldn't show her it, but they said that the spread widened, and it took her out of her position without her actually losing it. So it's just one of these things. I'm really interested, and I do definitely know there are some legitimate companies, because some of our traders are getting regular payouts from these guys. So I do know there are good ones out there. But if it's me, I would sit there and think, well, if I've turned this 100 grand account to $1 million and I lose it because of a trailing drawdown, how does that help anyone? You know, it doesn't. True, yeah. It doesn't make any sense. So if you're a good trader, and you came to me and you were a good trader, I would be fighting to keep you if you made that much money.
And everything you do is legit, like just real funds.
Right? I would go to your house. Honestly, if I've got a trader that's turned 100 grand into $1 million and I want to keep them, I'm doing everything I can to keep that trader. Yeah. Like even if they lost, 100 grand of it, 200 grand of it, that doesn't mean I'm kicking them out. No way. So that's just a really odd question that I've found. And the only thing. The other thing about this is that it's bringing more traders in to start to realize what's going on, which ones they can trust and which ones they can't trust, because there's huge comparison sites and all of this kind of stuff, and that's an industry in itself now, isn't it?
It is, 100%. But sorry. Question wise was the fund that you have is all real capital. Yeah. It is, right?
Yeah, so it's so funny. So what happened was when we started to put more money into this, I actually had to take a flight. I went to the Cayman Islands to visit the fund, because when we got our investment in, and we were all investing in our money to open our accounts and get this ball rolling and put our money to get this market access that we have through the SEC and through getting registered as a trading firm on the New York Stock Exchange, I got so worried about what happened with us because of my Forex funds that I thought, I'm going to go. So I came back from Italy. Oshin was supposed to go. He couldn't end up going. 4 days later, after coming back from Italy, I took a flight to Cayman. Never been to Cayman Islands in my life. Didn't know what it was. I thought I was going to something that was like Guernsey, Jersey, Isle of Man. Turned up there, it was paradise. I don't know if you've ever seen it. I was swimming with turtles, stingrays. Honestly, like it was brilliant. So I was still working European hours, getting up at 4 a.m, working till about lunchtime, and then I was swimming with the stingray in the sea, like in the afternoon. But yeah, I went to see the fund that was backing us, just to make sure that the money was real. And I saw their office, I saw their staff, and we had a couple of meetings, deposited the money, got the accounts open, etc. I came back to the UK. We've had multiple payouts and stuff, and that with that. So all of our money is basically held up in a bond. It's a bond that's detached to the company. So we deposit into the bond. They provide us with the market access. The bond is their collateral for providing us the market access. We trade in and out, and our bond balance goes up and down every single day. So that's how we're structured. So our payouts come from our bond. So that's how, like, when a trader makes money with us and we leverage them up, so their account is segregated, it's on its own, and then like basically if we give them another 10 grand to trade with, it's a bond. So we're all the money's protected in that way. So that's how we structured our company, just to make sure that, look, if the markets do completely capitulate and we have a flash crash, for example, the money's not in the same accounts.
Love that.
So
I love that. Final question for you.
Go for it.
I've been asking today, which is, if you could have known something before you got into trading, right? What would that be?
Yeah, I think the psychology side of understanding the personality, I think, it's an odd one, because nobody's going to go and see a psychiatrist knowing what they need before having done it. But that would have been the one. As soon as I really accepted parts of myself that I didn't want to accept through that journey, was when my trading started to get so much better. And this doesn't only include professional life, this includes personal life as well. So, I really had to soul search, because the more that my ego crept in my personal life and to myself, just not understanding myself correctly, was really harming my trading, right? And then once I went through that journey of breaking down psychologically. Like I wouldn't have even been able to have this conversation with you the same way we've had this conversation with you unless I'd done that, you know. So if you do everything with honesty, like an open heart, and you're willing to learn, and you do have a good enthusiasm and you're passionate about it, it's going to make this journey much easier. It really, really will. But yeah, having, you know, real self-acceptance, having a dedication, discipline, you know, you'll make it in this industry. Grit, you know, is a huge thing. Those things, you're going to have the ups and downs of trading, right? You know, accepting that it's an emotional journey is so important. If you have grit and you have the discipline, I eventually think the traders will make it.
Love that. Yeah, I love that. Rajan, it's been an absolute pleasure. I know that the audience will love this. I have a really great feeling about this episode as well.
Thanks, Riz.
And hopefully we'll do it again in the future also.
Perfect. Happy to. Thanks, Riz.
Definitely. Everyone at home, drop a comment of your biggest takeaway from this episode. Links for Rajan will be in the description below, so make sure you check that out as well. Other episodes will be on screen, including the day trading show. Check that out. And until next time, everyone, take care.